Thank you for joining us at 4. We begin with the big news from the Federal Reserve today, a move many have been waiting for. Just hours ago, the Fed announced its first interest rate cut since 2020. Karen Caifa in Washington with the details, including what's next.
The Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point.
A pivotal moment in the Federal Reserve's battle against post-pandemic inflation and for U.S. consumers squeezed by both higher prices and higher interest rates. The Fed starting to peel its key interest rate off of a 23-year high, setting the wheels in motion for consumers to eventually see relief on debt payments from credit cards to auto loans to mortgages. But that relief won't come immediately or quickly as the Fed keeps an eye on inflation and the slowing labor market to guide future decisions.
They have to look at this job market and figure out, is this a return to normal or is this a slowdown that we need to be concerned with? And I think those call for two very different policy prescriptions, and that's sort of the tricky balance that they're trying to strike at the moment.
Despite the cooling job market, data released Tuesday by the Commerce Department showed consumer spending holding up. Most economists viewing the Fed's September meeting not as an end of an era for interest rates, but the beginning of a new one.
And I think everyone agrees right now that, including the Fed officials, that interest rates are going to head much lower because that's ultimately needed to sustain a healthy rate of economic growth.
The Federal Reserve hiking interest rates 11 times starting in March 2022. The central bank's last increase was in July 2023. The Federal Reserve also giving its latest outlook on the U.S. economy. They do expect that unemployment will tick up to about 4.4% by the end of this year, but they're also a little bit more optimistic about lowering inflation than maybe they were this summer. The Fed expects to hit that target rate of 2% by 2026. In Washington, I'm Karen Caifa.